Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday 12th of June, recording the video 7:20 PM Eastern Standard Time. I was expecting Thursday's session to begin with a little bit of upwards movement to about 1949.63 before the downward trend resumed. That's not quite what happened. We didn't get any upwards movement, and that downward trend continued to show an increase in momentum. I've changed the wave count only at the hourly chart level slightly. I don't think there was a leading diagonal. It was, as I had it labelled previously, a series of overlapping first and second waves. The third wave is not quite over. A short-term target for the middle of it to end tomorrow was 1920. The downward trend should continue. Let's have a look at the wave count at the daily chart level. The bullish and bearish wave counts both see a trend change here and an ending contracting diagonal complete at this point here. The bullish wave count expects that the S&P is in an intermediate degree correction for a second wave, so it should breach the channel containing the first wave. It's likely, if this wave count's correct, to find support eventually at the lower of the double aqua blue trend lines. These aqua blue trend lines are drawn using a classic technical analysis approach. The lower one began back in October 2011. It's repeatedly tested, reasonably shallow, so it's extremely significant. I would not expect intermediate wave 2 to breach the lower of these trend lines by any more than 3% of market value. This big maroon channel is copied over from the weekly and monthly charts. The lower edge should not be breached by intermediate wave 2. A second wave correction should not breach a base channel drawn around first and second waves 1 or more degrees higher. And this maroon channel for the bullish wave count is a base channel drawn around primary waves 1 and 2. So that trend line should be respected for this wave count. At this stage, I have some confidence today that we have a high in place, at least for the midterm here. If we see movement below 1868.17, this point down here, I will have full and final confidence in a trend change down here. Let's have a look at the hourly chart with the end of intermediate wave 1 up here. Is this point up here? So within intermediate wave 2, it's most likely to be a zigzag, but it could also be a flat or a combination. If it's a zigzag, then minor wave A should subdivide as a 5. If it's a flat, then minor wave A should subdivide as a 3, and that would most likely be a zigzag. Either way, I expect we need to see a complete 5-wave impulse to the downside, and that looks like what's unfolding. I expect this movement began with a series of overlapping first and second waves, and now we'll have a corresponding series of fourth and fifth waves to the downside. The downward trend should continue. At 1920, sub-mini wet wave 3 will reach 4.236, the length of sub-mini wet wave 1, and once that third wave is complete, we'll have a fourth wave correction lasting about a day and then more downwards movement. When the fourth wave is complete, I'll calculate a target for the fifth wave to complete mini wet wave 3, and so on for the final fifth wave to complete minute wave 1. And once that's done, we'll have a complete 5-wave structure to the downside, which will give even more confidence in this wave count. Tomorrow, when markets open, I expect slightly higher and mostly sideways movement for a little fourth wave correction, which should not show up on the daily chart. So it should be over early tomorrow, and then the downward trend should resume. Microwave 4 should find resistance at the upper edge of this channel, draw it from 1 to 3, place a copy on 2. Micro 4 can't move into micro 1 price territory above 1943.22. If we see movement below 1918.60 tomorrow or the day after, that's this point down here, then at that stage downward movement couldn't be a second wave correction within this final fifth wave here, and so this fifth wave would have to be over. I would have more confidence that we have a high in place, at least for the midterm for the S&P. This bearish wave count has exactly the same subdivisions, exactly the same structures as the bullish wave count. But instead of a long first wave at intermediate degree, this could have been a primary degree impulse for a C wave to complete a huge cycle degree zigzag for cycle wave B. The bearish wave count expects we may have had a cycle degree trend change up here. Once we have confirmation of at least a mid-term trend change, this will be an invalidation point up here. No second wave correction can move beyond the start of the first wave. However, we should always assume that the trend remains the same until proven otherwise. While price remains above the lower of the aqua blue trend lines, which has held since 2011, we will assume the bull market is intact. I will only swap my wave counts over and have this bearish wave count as my main wave count if we see a full weekly candlestick below the lower edge of the maroon channel on the weekly chart and not touching this maroon trend line. Only at that stage would I have this bearish wave count as my main wave count and calculate downward targets for you. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.